Martin, welcome to Landlord Confidential.
Thanks, Travis. It's great to be here. Thanks for having me.
For the audience, let me introduce you. So I know you as a father, a real estate investor, and an Olympian, right?
Yep.
You're our first official Olympian as a guest. So let's start with that. Tell us about your history with the Olympics.
Yeah, it's actually kind of funny. Some of my friends, that was their lifelong dream. And for me, it was kind of an accident in a way. My sport was judo, and judo is a very predominant sport in Europe, particularly, besides Asia. And my parents immigrated from the Netherlands, and so my dad did judo when he was a boy. And so he enrolled me in a judo club when I was a kid, and it was just for fun. And then in college, actually in graduate school, in my early 20s, that's when I took it up another level. Happened to stumble into a gentleman who was a former champion in Poland, which is also a very strong judo country. And anyway, he really encouraged me to get back into it and started pushing me. And that was in the early 90s. And he thought I might make the team in 96, but that didn't happen, but kept pushing and made the team in 2000 and then went back again in 2004.
Amazing. So 96, it was in Atlanta, right?
That's correct.
2000, I can't remember where
Sydney.
it was. Sydney. Okay.
And that was awesome.
Yeah.
That was pre 9/11,
Yeah.
and it was and the Australians are just awesome people. They'd opened their homes. It was just, and I just gotten married that year. That was a phenomenal experience. And 2004 was post 9/11, obviously.
Yeah.
There was a lot of talk. I don't know if you remember that the terrorists were going to target something, and so the security was it really just changed the dynamic and the feel of it. And plus, it was a much more stressful time in my life. By that point, I had my first child, and my wife, when she came over, told me that number 2 was on the way. And so, yeah, that was the end of my judo career after 04.
Not going into competition with exactly clear mind at that point.
What were the accommodations like as a participant in the Olympics? Did they treat you well, wine and dine? Probably not whining, but
yeah, not the wine part. The accommodations in Sydney were great. They always build what's called an Olympic Village, and there's a huge hall where they have all the food, basically a giant food court, and so basically whatever you want to eat whenever. What was always amazing to me, because I've always been kind of health and nutrition conscious, is McDonald's is always has a big part of that food court. And I just remember in Sydney, you could always see Yao Ming. The dude is, I don't know what, 7'9" or something ridiculous. And he was always in the line at McDonald's. but yeah, it was. I think the Olympic Village is something that they want to repurpose into some type of multifamily or community later. So it's just like a community, and Athens, little bit. If you remember, there was always like, are they going to be done?
Yep.
So they rushed it so bad. The water from the bathroom when somebody took a shower was flowing into my bedroom every day. So there were some of those issues, but but who cares? We're not there for comfort.
Yeah. Is that like a family now that you're an Olympian? So do you still stay in contact with all your former Olympians? Is that you get together and
I don't
reminisce?
really. There are opportunities to do that type of thing. And so I'm still on mailing lists, and there's different Olympian get-togethers. And I got to say, I haven't really chosen to participate that much, just for no other reason. Just building your own business, young family. Life is busy.
Yeah.
But maybe at some point in my life, I'll go back and participate in some other way.
Yeah. You still do judo?
Not really. It's I would love to. I love the sport. I really miss it. But it's such a dynamic, explosive sport that from a participation perspective, I'm not sure my joints could take it anymore. But maybe I'll go back and coach someday.
Yeah. You said you started your family in 2000 at your first Olympics. It's 2024 now. So what's that been like, 24 years of family life?
Well, my first Olympics was when I got married that year in 2000.
Yeah.
Our first child was born in 03.
Okay.
So, yeah, he's 21. He's in the Navy serving our country. Super proud of him. And then the next one, I said he was home earlier, and I was mistaken. He's actually, he's home right now, but he's going back to college. He's playing football at Wheaton and studying engineering. Really proud of him. And then I've got 2 girls. My older daughter, she's taken after dad a little bit. She loves Olympic lifting.
Ooh.
And she's throwing shot and discus, and she's doing really great in shot put. Particularly, she won the overall all-around state championship in Arizona this year as a junior. So got big plans for next year.
Maybe Olympics in her future.
Maybe.
Yeah.
We'll see.
She'll be watching the Paris Games for sure, I'm sure, right?
Yes.
Yeah.
We're watching the Olympic trials right now.
Awesome. Well, the other thing we know of you is you're a real estate investor. So how did you get started in real estate?
Well, my background is actually as an electrical engineer. And during my athletic years, I realized living in a cubicle is not for me. And so after I retired, I wanted to find something different to do that gave me more freedom, more opportunity. And I bounced around for a few different things. I sold vitamins for a while. I got into selling insurance. Then I got securities licensed, and I was raising capital for private equity kind of companies. Yeah. Really enjoyed that, and then really believed in the products I was selling. But then '08 hit, and pretty much everything and all the people that trusted me had put money into and all these private ventures, pretty much everything went belly up. And that was a really terrible feeling. Like, okay, well, what are we going to do now? We lived in Chicago at the time, and my wife is from here in Phoenix, and thought, well, let's move back to Phoenix, and I'll start buying houses. So that's what we did.
You moved to Phoenix and bought your first house.
Actually, I think I bought my first 5 before I moved here. I had a brief partnership that didn't work out, but we bought 5 houses in August of '08.
Okay.
And we thought we were getting great deals. These houses in Maryvale that used to sell for $240, we were buying them for $80. Well, next month, the financial markets collapsed, and those $80,000 houses now were being bought for $20,000 or $30,000. Yep. So it was a bit of a baptism by fire, getting out of those first 5 deals, working through that. Still own one of them. But actually, that was one of the greatest gifts, I think, is to realize the risks in the market and other creative strategies to deal with it. And so that's really what propelled me to where I am today.
Yeah. So you learned those lessons from '08 till I think the market probably shifted finally around 2011, where the buyers started outnumbering the sellers and the prices started going back up. So
yeah,
how did you pivot during that time period?
Well, so the first few years I was buying at the trustee sale. Actually, Spencer was my helped me buy a bunch of houses, but it was a rough way to make a living. You know, you do the paint and carpet, do the renovation. You'd find buyers, but nobody could get financing. The only people that wanted to buy that house were other investors, and we might make, after all that work and effort, a couple $1,000 on a house. But through that, I earned the trust of several people who were helping fund some of my deals, and I developed a creative strategy with lease options. And so that was really the pivot point for me. And it was before that 2011-12, because I needed to do something different. So I was buying these houses for $20,000 or $30,000, putting 5 or 10 into them. And a private lender, I was paying him 18%, so he was happy. But I earned his trust, explained to him the risks, where he would actually lend me maybe 5 more than I was into it. But I had an option tenant in it already who at, let's say, $60,000 or $70,000. So I had a decent margin if that option tenant ever bought it. But even with renting at $800 or $900 a month, they were still cash flowing, allowed me to put a little money in my pocket, and that's how I started building my portfolio.
Of buy and hold.
Right.
Okay.
And very few of those lease option tenants exercised their options. Some did. And then I really regretted the 3-year options that I signed, because 3 years later, some of those option contracts were at like 55, 60, and these houses were not at that time maybe worth 90 or 100 or whatever. But, hey, we signed a contract. It worked out great for all the parties.
Yeah. Well, we know you as Martin, the trusted home buyer. What's that business all about?
Yeah. So when I first started buying, I didn't have a brand. I didn't really have a business. I was just a guy trying to make a living, right? But very quickly, I think within a year or so, maybe a year and a half, I decided to start doing direct-to-seller marketing. I was buying houses at the trustee sale, but the institutional investors were starting to step in, and they were willing to pay more than I wanted to pay. I wanted to pay a discounted rate from what the fair market value was, which I thought was reasonable. But the institutional investors had a different lens. They're like, as long as we can get our certain return, we'll pay up to X. Well, maybe the retail value was $70,000, but if the numbers worked at 80, they'd bid up to 80. So I was starting to have a hard time at the trustee sale. So I decided to do direct-to-seller marketing, and that's where I came up with the Trusted Home Buyer, started sending letters, started building a website, and doing all of that to attract sellers and offer my services for people who might need them.
Yeah. What sort of seller needs services like that rather than just going on the traditional market? Like, why wouldn't they just list it for sale?
Well, first of all, back then, you could put a house on the market. It doesn't mean it would sell. Lots of houses were just sitting there. And it could be a very time-consuming process. Let's say, for example, Bob, who lives in New Jersey, inherited Grandpa's house, and the house might be worth $30,000. But Grandpa was a hoarder, needs a lot of work. Well, Bob's got a business. He's got a family to feed. He doesn't have the time to fly to Arizona, deal with all of that. It can be a complicated, expensive thing to deal with, and at the end of it, he may not even be compensated for his time. So I would market to people like Bob, saying, hey, I'll buy your house. Yeah, I'm going to offer you a price where I can make a little bit of money, but you're not going to have to deal with anything. I'll take care of everything as is. I'll close in a couple days, and you can just walk away. And that was a great solution for those people. And so that the Bobs, as I just described, were my favorite clients. But there's also people sometimes they had a foreclosure or a pending foreclosure. Nobody was there to buy their house. I could maybe give them a little bit of money and take it off their hands if we could work it out with the bank, called a short sale. So there's a lot of different scenarios, particularly back then, where people just really felt stuck with their real estate, and we offered a way out.
Yeah. Well, that was what time period was that then?
I started doing that I think in 09 or 10, and I still market to this day. It's just the landscape has considerably shifted, of course.
Yeah. How has it shifted? What's the biggest difference now?
Well, the houses cost 10 times more than they did back then. That's the biggest difference. There's a lot of other differences as well. It's not difficult for anybody to sell pretty much any house anymore because there's, people have heard the term so many times now, lack of inventory. So the reason there's a lack of inventory is because many people who would like to sell can't, because they have a mortgage at 3%, and maybe they can get a great price for their house, but the house they want to buy, now they have to borrow money at 7%, and they can't afford the difference, so they stay. So there's just not enough transactions taking place to keep the market suitably liquid. So that's a really big difference.
Yeah. You also mentioned institutional buyers. You got to see their entrance into the market. They never touched single-family homes before the great financial crisis, and now they're in it every day. So what did you see back then, and what are you seeing now in terms of the institutional buyer?
Well, I don't really see them now anymore. I think we're priced out of the range where it makes sense for an institutional buyer to buy in Phoenix. But back then, they were smart. I wish I was as smart as they were. When I was saying I didn't want to compete with that guy with that institutional buyer for that $80,000 house, I should have been buying those all day long. I should have used my private equity experience from those days and raised $5 or $10 million and bought as many $20,000 houses, $50,000, $80,000 houses as I could put together. But I was gun shy from losing people's money in the 2008 crash, and I didn't want to leverage other people's money. I wanted to figure out how to do this myself, and so that's why I didn't do a fund to try to operate at a larger scale. In hindsight, I still wish I would have, but that's why I didn't. I wanted to have multiple exit strategies. I didn't ever want to get stuck again losing mine or, more importantly, other people's money. And what I liked about my buying strategy is if I bought under market at an appropriate price, I could put some money into the home and sell it and hopefully at least break even, if not make some money. And if I could find a way through creative financing or with a lender to keep the home, even better. But I wanted to have that. I wanted to have that safety blanket, if you will, just to make sure because if you remember, now in hindsight, we're all saying, well, why didn't we just do way more of this? But no, in 2012 even, there was a lot of talk of how the financial markets were going to collapse. I don't know if you remember, in the whole Mayan calendar and all that, all that nonsense. But still, there was a lot of talk about how gold was going to go to the moon, the dollar was going to collapse. There was no certainty in the market, from my perspective, that this housing trend was going to continue to recover. It could have very well have reverted again. So I was just trying to cover, just be as careful as I could.
So I guess today, with the institutional buyers out of the market, is there less demand for these off-market deals, or where is the demand for off-market deals?
The demand is extremely high. There's been several new players, also institutional buyers, but with a different buying model, which I'm sure most people recognize: Open Door, OfferPad. Zillow was buying houses and flamed out spectacularly. That was an interesting time, by the way. People would call me like, "Hey, I got this offer from Zillow. Do you want to compete with it?" No. It was crazy. They'd buy a house for $495,000, and then you see it on the market for $425,000. Like, what are you doing? Anyway, Open Door and OfferPad. they've changed the landscape dramatically, and I think they in general offer a good service for people. It's a little bit different than what I do. When I make an offer, there's no contingencies. We're going to close 100% guaranteed. Open Door and OfferPad don't work that way. They can and sometimes do cancel their offers. Happened a lot during COVID. They had a lot of people who were left hanging. But still, they also give the option to their client, like you can cancel anytime too. It's a different process, but it does offer. It's another player in the marketplace that it's definitely shaken things up. So I don't see the big hedge funds buying houses anymore, but Open Door, OfferPad are definitely have made a big impact. And then on top of that, anybody, I mean, just like I did in '08, I wanted to go out and start a new thing and make money and feed my family. The number of people interested in doing that in real estate has just exponentially skyrocketed. And they are often taught a strategy that I'm personally not a huge fan of called wholesaling. But it can be great when done well and transparently and with ethically. But the downside of that is there's literally thousands of people running around trying to buy houses who don't know what they're doing. Their offers are full of holes, and they often don't perform. Cancellation rates from these types of buyers are often in excess of 70% of their contracts. So that means 70% of the time or more, these sellers who thought they had a deal and went out and put a down payment on a new house or put a deposit on an apartment are now left high and dry. And I think that's terrible. So I'm not a real big fan of the investing landscape as a result of that. And so that's really where I try to make my mark and in my brand, my business, the Trusted Home Buyer, that when we make an offer, I'm always telling my team, we don't make offers, we make commitments. So if I'm sitting down with you and we sign a contract, it is a done deal. $10,000 non-refundable earnest is going into the title company the next business day, and it will close on the date of your choice, guaranteed.
Most of your acquisitions that you're making nowadays, are you buying it as a buy and hold, or are you buying it to flip it? Like, do you see some equity that you could, or some value add?
It's really hard to buy a rental right now that makes any sense financially. But to answer that question, we are buying some rentals. We have an acquisition strategy that I'm personally very enthusiastic of. There's situations where people have a wonderful mortgage of 3% or maybe up 4% interest rate, but for various reasons they're having trouble selling their home. Maybe they still owe more than what they could get if they sell it traditionally, and they have to pay realtor commissions, for example. Or maybe they just need a little bit more out of their equity than they can get from the traditional market. So we have a buying strategy where we'll come in and we'll pay them cash for all their equity. And there's no fees, there's no commissions, and then we'll take over that mortgage. And so in those instances, it may make sense to keep it as a rental. And so when that happens, and we do a fair amount of those still, and I'd love to do more of them. And then of course the fix and flips. There's always properties out there that are in sore need of whether it's a gut remodel or just paint carpet. But generally, the greater the amount of rehab, the more value an investor like my company can add.
You said you started your buy and hold strategy by accident in '08, getting stuck with a property or two. Why do you believe in buy and hold in real estate? Like, why do you pursue that strategy?
Well, there's a lot of reasons for that. One is cash flow is wonderful. A lot of my friends who are real estate flippers or wholesalers only, every time a deal closes, they've got to find another deal in order to pay their next bill. And when you build a rental portfolio, you start building cash flow. And as that cash flow can grow, like Robert Kiyosaki teaches, right, that if that cash flow can get to the point where it can sustain your needs, then really you don't have to work anymore. And so, but that's just one aspect of it. And then on top of that, you have the tax advantages of owning real estate, which are IRS tax laws are very favorable to real estate investors. So there's lots of deductions you can take. So you can pay less taxes, which means you can keep more of the money that you make. And by the way, I'm not advocating for anything cheating tax. I pay my taxes every year, but I'm just telling you the truth. Business owners and real estate owners get favorable treatment in our tax code per the law.
Yep.
So, and then I think very powerfully, particularly the last 10 years have shown, is appreciation.
Mm-hmm.
You have an asset that you bought for X, and now it might be worth 10X, which is really rare in real estate.
Yeah.
Generally, real estate appreciates relatively slowly. I don't think we're ever going to see this type of appreciation again. Now, granted, it doesn't match the appreciation of, let's say, Bitcoin or some other e-com businesses that can go from zero to hero overnight.
Yep.
Real estate's never going to I don't think it should ever be a get-rich-quick type. If you're trying to get rich quick, real estate is probably not for you.
Yeah.
Real estate is work hard, be smart, be diligent and consistent, and then over time, you might be surprised at where you stand. Like you hear sometimes, you may have heard this saying, we often overestimate what we can accomplish in 1 year, but we often vastly underestimate what we can accomplish in 10 years. Mm-hmm. And so the appreciation of real estate is can be a real blessing. The downside to appreciation, of course, is not generally a check you can cash, right? It's still the rent that's coming in every month. Now, with that said, though, there's also you can borrow against your real estate. And the beauty of borrowing is that's not income per the tax code.
Tax-free. Yeah.
So it's tax-free money that you can put into your pocket. And I'm not a big fan of over-leveraging, and I've never have. And I'm thankful for that because like right now, the rental market's getting a little more challenging again, and I'm not over-leveraged. And so even though the rentals don't make as much as I want, that other cash I was able to take out when the interest rates were really low, I was able to either buy more real estate or invest in other things, which also produce cash flow.
Mm-hmm. I guess in your early days, you were self-managing, I'm assuming?
Yes.
Tell us about that. What was your experience like as a landlord?
So I have a love-hate relationship with the landlord business. I look at what you guys have done with HomeLadder, and I love the property management business when I'm looking at it on paper. Mm-hmm. You provide a great service, and you get a piece of every. You don't have to, as a property manager, you don't have the risk of property ownership, and you get earned income, and you can scale as big as you're capable of running well, right? Mm-hmm. And so I love the property management idea. I just never ran it as well as you guys do. I was very involved, which got old too. At some point, you don't want to do every property inspection, draft up renewal documentation. In an area where I was probably not my forte either, was vetting tenants, keeping up with all the different laws. I mean, there's just a lot to know and to manage, and the more I focused on that, the less I was focusing on my main business, which was acquisitions. Mm-hmm. I wanted, the trusted home buyer to keep running. And so a couple of times I tried to expand my own internal operations by hiring a full-time property manager, and it just didn't quite work out. And I'm really happy to outsource my properties now to you guys.
Mm-hmm. Have you ever considered buying properties in other states than Arizona? Or
I have, but I never have. I haven't followed through on it. Simply because before I moved here, I owned a couple properties in Illinois, and one was a Section 8, and one was, and what do they call it, an SRO, a student rental, or I don't know. I thought it was called an SRO. Just rented out each bedroom individually.
Okay,
and it made good money.
Yeah.
But it was a nightmare to manage. It was just always a problem.
Roommate disputes.
Yes.
Yeah. They drank my milk.
So
yeah.
And so I had those two rentals, and for different reasons, both of them were just a thorn in my side. Mm-hmm. And eventually the Section 8 one, I ended up just selling to another investor like myself for various reasons. It was just a mess. Mm-hmm. And I also, before I moved out here, I acquired in 2005 a couple of properties in Florida, which were a mistake, and they were a real pain in the butt to manage. And I could go into stories on that, which you don't want to hear. But anyway, I'm so happy to be when I got divested of all of those. So I'm very hesitant to step back into it. But I got to be honest, I'm tempted because the numbers make so much more sense in some other states right now.
Yeah.
But I would have to have real confidence that I had a phenomenal local property manager in that market, or I wouldn't touch it.
Boots on the ground, yeah. All right, 2024. So interest rates are at, all-time highs, at least for the past, since 2000, right?
Yeah.
Housing affordability is through the roof. Like almost no one can afford a new house nowadays. So
Right.
How are you adapting? Like what's your strategy now?
Honestly, I don't have a great answer for you because I don't know. This is probably the number one topic that guys like you and I sit around and talk about, and I've yet to meet somebody who is really confident they have the answer. And if they did, I probably would be very skeptical that they, just because there's so many competing viewpoints on what could or should happen, right? Some people say, well, we need to go back to low interest rates. And yeah, that would make houses more affordable. The problem is low interest rates are terrible for people's retirement accounts.
Yep.
So all our seniors and anybody who wants to save money for their future, low interest rates are horrible. In the history of interest rates right now actually are not high.
Yeah.
They're normal.
Yeah.
What we had was abnormally low rates, and I'm going to get a little bit on my soapbox here. It was presented to the American people as we're trying to help you. And that was an enormous, I think it was a Trojan horse. It did not help the average American family. It helped, well, to be honest, it helped guys like me.
Yep.
The more real estate you owned, or the more of a business you have that could borrow money, so basically the wealthier people, it really helped.
Yep.
If you have one house, which your average American has, one house, it didn't help you very much because your house went up in value, but so did everybody else's house. So when you want to sell your house, now you're going to replace it with something of probably the same price tag or more.
Yeah.
Unless you're downsizing. But even so, your payment's going to go up because anyway, so the low interest rates really made the rich richer. I think it robbed a lot of the money out of the average working class's pocket. So I personally am not a big proponent of seeing the interest rates go back down for that reason, even though it probably really helped me personally.
Yeah.
And I know a lot of people feel like it would help them. I just don't think it's the long-term solution because I don't think it's the way a healthy economy operates.
Yeah. Yeah, to your point earlier, the institutional buyers, they took advantage of that, right? They were borrowing at 0, 1, 2%
right.
in 2020, 2021. Like, as their rates reset, and they've overpaid for those homes back then, and their rates are resetting in terms of their debt, like, do you think they're going to be forced to sell? Or what do you think will happen in the institutional world?
I don't have much insider knowledge into the financing of the different hedge funds that were buying houses. I do know that I have a little bit more awareness, not from my own involvement, just because of friends and relationships in the commercial multifamily space. But I know it's hitting them hard.
Yeah.
Because a lot of these commercial properties, they don't have 30-year fixed rate mortgages. Most of them don't. They had some type of reset, and now those resets are hitting, and the property values of these multifamily properties have dropped substantially because the valuation of these properties is based on cash flow.
Yep.
Well, now the cash flow has been hammered by these rising interest rates, so I don't know if there's going to be spillover from the commercial to the residential. Historically, there has, but then historically, we've never had a weird situation like we have right now with all of the different factors of the interest rates and the lack of inventory and this mythical, I don't know if it's mythical, but this theoretical soft landing for this economy that the Fed's trying to create. Maybe they'll be successful, maybe they won't. Back to your question on the institutional investors that own the single family homes, I'm guessing that they're big enough that they have, that they're going to be okay. I haven't heard of any of them that were way over leveraged. I'm not saying that they haven't, but I think they stopped buying soon enough where they're okay.
Yeah.
You mentioned earlier, like the rental headwinds they've been facing now. It's been more challenging to rent these properties out.
Yeah.
And what kind of challenges are you seeing on that front?
Well, a couple of years ago, the rent market went gangbusters, right? I mean, people were scrambling to get into anything, and the rents just skyrocketed. And now it's not like that at all. Landlords have to be fair in their pricing, or they're just not going to get a tenant. And that's been my philosophy, and we were chatting about this earlier as well. And my personal preference is let's price the property fair right now so that we can get a good quality tenant into that home, keep the vacancy short, and get a great tenant. My opinion is if you are too aggressive in your pricing, if you get an applicant, it's somebody who's maybe getting denied elsewhere, and so you're going to get a less desirable applicant, perhaps. And so anyway, I'm a big proponent of it, whether it's rental or for sale. Price your property correctly from the get-go. And time on market, vacant houses, I hate it. It's a money suck. So I think that's something that a lot of landlords would do well to have that conversation with their their property manager, like, hey, where do we need to put this so we can get this rented within the next couple of weeks?
I couldn't agree more. Like, a lot of landlords come into the market thinking they want to maximize rents. Like, of course, they're thinking, how do I maximize my return on my investment?
Right.
It's high rents. But like you just said, if your property sits on the market for 3 weeks, then you've already taken away all the extra revenue you're going to generate from asking $50 more a month. So be aggressive. That's how you're going to attract the most high quality tenants that are going to stay in the home long term. Then you leave some meat on the bone for your annual rent increases. But yeah, like, you're totally right. Yeah. In 2020, 2021, when COVID hit, we saw rents jump 30% year over year for 2 consecutive years, whereas the norm in the market had been 3.5% appreciation year over year. So we finally seen that flatten out and even decrease a little bit over the last couple of years. I think we're finally starting to see a little bit of a shift there. Are you seeing the same thing? Or are you still seeing your rents kind of?
No, 100%. I've seen them slide back a little bit. And I'm happy to take, I don't say I'm happy, but I'm willing to take a little bit less rent, again, to keep the property occupied. I mean, you think about $50 a month. That's $600 for a year.
Right.
Well, if the average rent is $1,800, that's 1 month of vacancy cost me 3 times that.
Right.
Yep.
So that's $150 a month. I would rather keep it occupied or re-rent it like that, with a lower rent, and again, hopefully get a great tenant. And then over time, as rents go up, people don't want to move, and I don't want to stiff people. But if it's warranted, you can implement a fair rent increase at that time.
Right.
But I would and then there's the other risk. A vacant property, you might have other things that happen. You've got utilities, cost. You have the time to turn utilities on and off, and then not to mention the turn cost. Let's say a tenant moves out because they can't afford the $100. You want to increase the rent. Well, maybe keep them in and avoid all of those costs. So that's
So
my
that being
thought.
said, like, is your strategy generally on a renewal time to offer a renewal slightly below market rate to incentivize them to stay, or?
Well, when I was managing myself, I took it on. I didn't systematize it. I met with people, my tenants, and I kind of just showed them this is what the rents look like, and it kind of depended on where the economy was at the time. If rents were going up, I tried to keep up somewhat. There was plenty of times where I increased less than the market just because the market was going up so rapidly, and I want to be fair. But also, too, in my business, on the trusted home buyer side, frustrated landlords, tired landlords as I call them, are always candidates to sell because they under-marketed their property or kept the rates too low for way too long, and then the property just didn't make sense financially, and then it got into distress, and then the AC went out, and then they didn't have the money to fix it, and et cetera. So I feel a responsibility. To try to price as fairly as I can because that way we have the reserves to take care of a property when it needs anything. I don't ever want to put myself in a situation where all the revenue is being bled from the company and you don't have the means to properly take care of your tenant.
Yeah, that's well said. That it aligns with our strategy too. Like, you have to have an annual cadence with this, where you're getting out to the property, doing preventative maintenance, doing an inspection to see how well it's being cared for, and keeping up with the home. And that means that you're going to obviously increase rents to keep up with that. But our strategy is typically to offer that renewal slightly based on their performance, right? If you get into the home and you see this resident's taking really good care of the home, okay, the market's appreciated 4%. Let's offer renewal at 3%. That way, there's still some incentive. They can see what it looks like to move around. So
it's a good general rule to people want to feel appreciated. If they're taking care of an asset that's worth hundreds of thousands of dollars, I'm not going to nickel and dime for a $10 or $20 whatever rental increase.
Right.
Let people know they're appreciated, and you definitely. I would love to have all my properties have a caring tenant who really takes care of the home in it. That's invaluable.
And when you can explain the why behind these decisions, like, that goes a long way, right? They can see what's going on.
They know that we care about that our homes. We care about them. We don't want them. One of the things I like to say is it might be our house, but it's your home, and so I appreciate people who treat it like their home, and I want to reward that.
That's amazing. We might have to steal that.
Yeah.
It's been a great chat, getting to know you, Martin, learning about your background. Is there anything that we missed today that you'd like to talk about?
I don't think so.
Great.
I appreciate you guys having me. It was awesome.
Absolutely. If folks want to get a hold of you and utilize your service, maybe there's some owners out there that need to sell their property to somebody like you. How can they get in touch with you?
Yeah. Thanks for bringing that up. You can go to my website, thetrustedhomebuyer.com. and just fill out the little form. There's a phone number there, and you'll probably be connected to Emily in my office. She's awesome, and if you want to speak to me, just tell her you like to speak to me, and she'd be happy to transfer the call.
Great. Thank you so much, Martin.
Thanks for
Martin.
having me.